The silence hit first, not the peaceful quiet of dawn, but an unsettling stillness. It crept into grain elevators and loading docks, once alive with activity, now frozen in time. Combines and tractors sat idle, their engines cold, their purpose suddenly in question. This was the new soundscape of rural America, a silence born of profound, unnerving change. Gone was the hum of trucks lined up to carry soybeans to market. Gone, too, the confident chatter of farmers who had built futures on global trade. Storage bins remained full, unsold goods weighing heavy on the land and its people. This wasn't a peaceful pause, it was abandonment, forced by decisions made far away. The infrastructure of a thriving industry stood frozen, not as history, but as the harsh present. The fields themselves seemed to hold their breath, waiting for a resolution that might never come. This silence wasn't just an absence of noise, it was the sound of worry, uncertainty, and a fundamental shift. American farms, once the breadbasket of the world, faced a quiet crisis. The rhythmic pulse of agricultural life had faltered, leaving an echoing void. The silence was the sound of livelihoods at risk, and it all started when their biggest customer simply walked away. The future of American farming was suddenly and profoundly uncertain. It happened with shocking speed. One day, China was the top customer for American soybeans. The next, that market vanished. For decades, American agriculture had relied on China's demand, shipping millions of tons of soybeans across the Pacific. Then, a bitter trade war erupted. Tariffs became weapons, and American soybeans were caught in the crossfire. China slapped heavy duties on U.S. beans, making them too expensive for Chinese buyers. Overnight, the flow of soybeans to China slowed to a trickle, then nearly stopped. Orders were canceled, ships rerouted, and the global supply chain ground to a halt for American farmers. Before the dispute, China bought about 60% of all U.S. soybean exports, a multi-billion-dollar relationship. When tariffs hit, that lifeline disappeared. Farmers who had invested in land and equipment for this market were left stranded. The golden age of U.S. soybean exports to China was over. The consequences rippled across the heartland. The silence on the farms grew louder, echoing the loss. This wasn't just a dip in sales, it was a seismic shock, and the fallout was only beginning. The numbers were staggering. U.S. soybean exports to China dropped by as much as 88% almost overnight. Nearly 9 out of every 10 bushels once destined for China suddenly had nowhere to go. This wasn't a minor setback, it was a catastrophic collapse. Billions of dollars vanished from rural economies, impacting not just farmers, but seed suppliers, equipment dealers, and local businesses. Orders for U.S. soybeans from China hit historic lows. Some weeks saw 0 new sales. The pain spread beyond soybeans, pork, sorghum, and dairy, all faced retaliatory tariffs. But soybeans, due to their sheer volume, became the symbol of this economic warfare. The loss was hard to comprehend, even for experts. It wasn't just about numbers, it was about livelihoods, families, and the survival of generational farms. The speed and scale of the financial hit were overwhelming. Farmers, known for resilience, faced a challenge unlike any before. The ground beneath them, once solid, now felt unstable. The crisis was personal, not just economic. The future of rural America was suddenly in jeopardy, and the road to recovery looked long and uncertain. This crisis was the direct result of escalating trade tensions. The U.S. imposed tariffs on Chinese goods. China retaliated, targeting American agriculture. Soybeans became a primary target, inflicting maximum pain on U.S. farm states. As American beans became more expensive, Brazil seized the opportunity. Chinese buyers turned south, and Brazil ramped up production, signed new deals, and improved infrastructure. China diversified its suppliers, aiming for greater food security and less reliance on the U.S. The COVID-19 pandemic later added more uncertainty, disrupting shipping and supply chains. For American farmers, it was another blow in an already tough fight. The shift felt strategic and long-term. China wasn't just buying Brazilian beans out of necessity, but forging new alliances. Even if tariffs were lifted, the U.S. might never fully regain its market share. The trade war pushed China to accelerate its diversification strategy. American farmers weren't just losing sales, they were losing their dominant position. The global market was changing, and not in their favor. The consequences of this shift would be felt for years. The era of American dominance in the Chinese soybean market was over. The silence on the farms was filled with frustration and a sense of betrayal. Farmers like Caleb Ragland spoke of years spent building trust with Chinese buyers. Relationships now shattered. It wasn't just about lost income, but lost partnerships, and a future that suddenly seemed uncertain. Many had invested heavily in land and equipment, counting on stable demand from China. Now they faced mounting debts and diminishing prospects. Farming is more than a job, it's an identity, a way of life under threat. Many felt abandoned, pawns in a geopolitical game they never asked to play. Some initially supported efforts to rebalance trade but didn't expect to bear the brunt for so long. Government aid provided a temporary cushion, but what they wanted was sustainable solutions and their markets back. The loss of identity cut deep. Generations had prided themselves on feeding the world. Now, that reliability was in question, not because of their work, but because of politics. Farmers saw their legacy and their children's future slipping away. This was more than an economic downturn, it was an existential crisis. The fear that things might never be the same haunted every decision. The American farmer's resilience was being tested like never before. Facing crisis, American farmers scrambled to adapt. Some switched crops, corn, cotton, anything, but markets for alternatives were limited and prices unstable. Not all land or equipment could be repurposed overnight. Many sought new international buyers, targeting emerging markets in Asia, Africa, and Latin America. But these markets were smaller, harder to access, and fiercely competitive. Rebuilding lost market share would take years, not months. Farmers called for more than temporary aid. They wanted long-term policy solutions and stable trade agreements. The constant uncertainty was as damaging as the lost sales. Many took on more debt, mortgaging their futures just to survive. Some lost their farms. The strain on families was immense. Mental health in rural communities suffered as the pressure mounted. The uncertainty cast a long, dark shadow over every aspect of life. Farmers weren't asking for handouts, they wanted a fair chance to compete. The crisis exposed the fragility of their livelihoods, and the need for real lasting change. The collapse of the soybean trade with China rippled through the rural economy. Equipment manufacturers saw sales plummet, dealerships closed, and layoffs followed. The web of businesses supporting agriculture began to unravel. Local banks, the financial backbone of rural communities, faced rising loan delinquencies. Credit tightened, making it harder for farmers and local businesses to get the loans they needed. The economic slowdown spread. Main Street businesses felt the pinch as spending dried up. A Phase 1 trade deal with China in early 2020 brought a brief surge of optimism, but promised purchases fell short, and tariffs often remained. Recovery was slow and incomplete, trust was broken. The crisis sent a signal to the world. U.S. trade policy could shift quickly, upending established relationships. International buyers began to question America's reliability as a supplier. If the U.S. could become unpredictable for China, could it happen with others? This erosion of trust was one of the most damaging long-term consequences. A reputation, once lost, is hard to regain. The world was watching and taking note. The soybean trade war was more than a temporary setback, it was a wake-up call. It exposed the vulnerability of relying on a single, massive export market. The loss wasn't just monetary, but a loss of trust and standing. China found new suppliers like Brazil, forging relationships that won't easily break. The U.S. may have permanently lost a significant share of that market. If America is seen as an unpredictable trading partner, other countries may also diversify away. This could erode America's dominance in global agriculture, a position built over generations. The stakes are high. The silence on American farms is a stark warning. This crisis could reshape agriculture for decades. It underscores the need for stable trade policies, diversified markets, and renewed commitment to global food security. Without these, the echoes in empty grain elevators could become permanent. A golden era could be lost and the future less certain. The world is watching, and America's agricultural legacy hangs in the balance. The lesson is clear: resilience alone isn't enough. The future depends on adaptability, trust, and smart policy. The next chapter for American agriculture is being written now.